Good morning.
Super early morning.
It's an early morning here. Consumer debt hits a record for most Americans except the wealthy. Now, we're going to talk about this a little bit, and I also want to talk about what's going on with the gold and silver market. It's happening. What I've been talking about for about a year is starting to unfold. That is, the spot prices are going down and the premiums are going up. And I'm not talking about just with Miles Franklin. I'm talking about all of them. Stacey looked around yesterday and noticed that, and actually your broker, Miles Franklin, came out and said, hey, heads up, this is fixing to start happening.
Yeah.
That's how they're going to fight a volatile, manipulated market. It makes sense to me because if the demand's there and the supply's not there and there's manipulation, that's about the only thing you can do is move the premium prices up. So what do you know? Before we get into this, is there anything you want to say about it?
Yeah, just heads up, you guys. If you're going to call and make an order, which I'd love to talk to you and help you, spot price is down, obviously, which is good. Premiums are up, though. And used to, I could hold a premium for about a week and give you a quote. That's not happening anymore. Every time I log in, it seems like the premiums are creeping up on me. I'm getting notifications, hey, check your orders.
If you can even get it.
Well, that's the second thing. And then, so when you guys call in, I'm trying to be honest. I'm trying to, give you guys a heads up that some of this stuff I'm 20 days out from getting our next shipment. I'm 30 days out from getting our next shipment. And which not just us. So I got on other websites because I'm like, is it just Miles Franklin? No, I got on various other websites yesterday, tried to make orders, and out of stock, out of stock, out of stock. Notify me when things are in stock. And that's where we are. So you're going to get your stuff if you call me. It's just going to be, instead of 3 weeks, it possibly could be 6 to 8 weeks at this point.
Yeah, that's the good news.
Right.
For over 30 years, Andy Schechtman has been in business. He is CEO of Miles Franklin.
Yes.
I have been doing business with him long before Stacey ever started selling gold and silver for Miles Franklin.
Right.
And there's never been a bad transaction. Rest assured, you'll get it. But shipping is getting slower.
It is. It is.
It's strange. I kind of miss that. I figured on the spot prices and the premiums,
you nailed
how they
that.
would act. But the shipping dates, that kind of, and it throws people off. There's a lot of people saying, hey, where's my stuff, But just rest assured, you'll get it. Andy Schechtman will make it right.
Yes. And just real quick before he goes to that, I want to touch on, a lot of people get confused between spot and premium. Spot is going to be the same for every piece that you buy. Every piece of silver, I'm going to give you the exact same spot price. Your premium is what's different. And people are like, what is a premium? Why are you charging extra besides the spot? So when you buy spot, that's just a raw piece of silver. That's all that is. The premium is where the mint goes, they form it, melt it down, put their stamps on it, make it all pretty. They charge a price for that. They turn around and sell it to, say, Miles Franklin or another company. Then we have to charge a little extra price on top of that to pay everybody else. So you've got your spot, which is the same for every piece, gold or silver, and then you've got an additional premium. And premiums are running anywhere from almost $4, I guess, per ounce for silver. Depends on if you buy 10 ounces or one, all the way up to like $14. Right now, for an ounce of silver, your spot's 18 something. Your premium is almost $14.
Wow.
So you're paying almost as much for your premium as the ounce.
And
of
you're
silver.
still beating most of the
Yep.
time. 90% of the time,
Yes.
if not more, she's beating everybody else's prices.
Yep.
So give
and
her,
I'm trying.
Yeah, give her a shot at
Yep.
it if you're into buying precious metals and hedging your wealth against the crap that's coming down the pipe.
Yep.
So this is interesting. Consumer debt hits record for most Americans except the wealthy. Usually. That's usually how it works. Liabilities for the bottom 90% jumped $300 billion over the last year. Meanwhile, debt among the top 10% is virtually unchanged. Yep. Liabilities meaning you are responsible for something. Liabilities are money, things that take money out of your pocket. Most Americans are more indebted than ever. Consumer debt, including credit cards, rose to an all-time high for the 118 million U.S. households among the bottom 90%. You see why I let Stacey read?
We've been talking about this, though. We have been saying that people are using credit cards more and more, and they're not paying them. And this is going to become an issue.
And I can't imagine being that. If anybody is in that situation, I really feel for you because that is, I've never been there where I had to rely on a credit card that was going to charge me 20% interest. It's like a hole. You're digging a hole you're not going to be able to fill. And a lot of people know that. But on the same note, I probably wouldn't go hungry either, and I wouldn't let my
Nope.
kids go hungry. So I see what's going on. If you're not there yet and things are starting to get tight, because look, if you're one of these jobs that's about to get cut, if you're working at a bank and you're in the mortgage department, you might start trimming the fat now. I'm not trying to be the bearer of bad news. That's just the way it is. And there's a lot of jobs like that are going to start getting taken out.
Yep.
So try to rein it in. Now, the banks are. The banks are stopping mortgage loans. They're really reining in. I know.
Well, I just talked to one, so I'm going to interrupt you. Sorry. I just talked to a mortgage lender yesterday that she called in to buy precious metals. She lived through, and I asked her if she mind if I told what she told me. She lived through the 2008. It literally destroyed her. She said it took me a decade to build back. She said because I did not see it coming and I did not prepare. She said I'm seeing it happen again. She said I'm not getting work anymore. She said, and I am not going to let this happen to me this time. So she was buying precious metals. She's hedging against inflation. She's being proactive this time.
Yeah, there's a lot of people that learned lessons in 2008. And for the people that didn't get to go through it, I was not investing in 2008. I wish I'd have been paying a little more attention. I'd be a lot better off, because the people that came out of that were investors really they really did good there. So maybe she'll have the opportunity to take advantage of the situation.
That's what she said she's setting herself up for. She's putting money aside for rental property. She's doing different things.
Ooh, yeah.
Yes, I know. We talked about that.
Somebody's got to be there to buy them up, and and you can flip them and make people deals and rent them and give people deal on rent. And as things are bad, you can be that hero, if you will, because if you're not, who is? The government? They're going to buy it all and rent it to us? Maybe one day, but hopefully not this time. Meanwhile, consumer debt among the top 10% of households is virtually unchanged over the past year, the Fed's data shows. Inflation's running at a 40-year high, forcing many households to load up, again, on credit cards or dip into savings to make ends meet. Lower-income families spend a greater share of their earnings on necessities like groceries and gas. So higher prices can afflict those households much more so than the wealthier ones.
True.
Okay, hand me that right there, that piece of paper.
Sure.
This is what Stacey was just talking about. This is going on in the UK. I talked a little bit about this with the Economic Ninja on an interview yesterday, but this is happening overseas big time. And as the British pound falls, Japan is selling U.S. debt.
They are.
People are really stopping. So listen to this real quick. This came out yesterday. UK lenders, Virgin Money, and Skipton Building Society temporarily withdrew mortgage deals from new customers on Monday. That was yesterday. Lenders are struggling to accurately price their products. Well, why is that? After the pound fell to new lows and sent the interest rate on government debts to a 12-year high. So you've got high interest rates and their currency's falling. And what brokers predicted is just a start of a major shift in the UK mortgage market. That's a big shift.
Yeah.
I'm going to read just a little bit more and we'll get into it. Nicholas Mendez of the mortgage broker said that the markets were so unpredictable that lenders were unable to price their products, a process which usually only involves forecasting the economic conditions, including interest rates 2 weeks in advance. It was causing a chain reaction in the market where no lender wanted to be the last one standing. Okay, so banks are going, whoa,
Right.
we see something bad coming, something we've never seen before. Let's stop. Well, what happens then? The velocity of money stops. That's how money is created. When and Travis, the economic ninja, went on into this yesterday, and I completely agree with him. When the banks quit issuing loans, that's how money is created. That's really strange, fractional reserve banking. And when you stop that, that creates low velocity. Velocity of money is how everything keeps moving. It's a very good measurement of how everything goes. You know, money, how many times it swaps hands. Well, when it stops, it really stagnates, and it makes everything kind of hold up. and this is going on in other countries, the euro is the one to really watch.
I think so. Yeah.
When the euro starts to fall, I've heard we're 2 weeks behind. The Economic Ninja thinks we're 4 to 6 weeks behind. I don't put a timeline on anything because I'm always wrong. But just know we're probably the next currency to really, really take a hit as other countries are selling our debt. Because who would want to be involved in our
Well,
currency?
we're starting to see that just a little bit, not to that extreme, but we already talked to the lenders, and we're already see people put the stop on the mortgages a little bit here, tightening the restrictions here. I mean, I've actually spoke to the lenders when I made those phone calls the other day. I went around, I said, hey, what's going on with and they actively said they are tightening their mortgage requirements. And so, yeah, what's happening there? Yeah, I could see it happening here easy.
Oh, yeah. It always happens somewhere else first. That's the main thing.
Well, hey, before we go, why don't you talk about what your conference you're going to in New Orleans?
Yeah, okay. So if you want to hang out with me and the Economic Ninja, and there's several other people here, the investment conference in New Orleans, George Gammon,
Rick
Rule, Jim Rickards,
Doug Casey.
I mean, there's some big
Great
names
people.
there. I'll put a link in the description below. It's actually the Economic Ninja's link. You can use that to buy your tickets, and let me know if you got one.
Yeah.
And I'll look for you on there. So it's October 12th through the 15th. That's it, guys. Have an awesome, awesome day. We'll see you in the next one. Later.